Hello, everyone. Yeah, it's pretty nice being here. And in this market cycle, we can see here and most of we see together discuss what's the next stage for the crypto. Yeah, so this is Jocy. I'm the founding partner of IOSG Ventures. Yeah, so and IOSG Ventures, we start investing from 2017. Yeah, we heavily supported in infra space. Yeah, we are one of the backer in Eigenlayer, Babylon. And right now, we're also pretty active in the Asian investment. Yeah, so maybe we can quickly introduce from yourself. Yeah.
Hi, I'm Vance Spencer. I'm one of the co-founders of Framework. We're a crypto native asset manager, and we do DeFi, we do infrastructure, we do DePIN. We kind of do anything that involves crypto. So that's us.
I'm Haseeb, managing partner of Dragonfly. We are also a crypto fund, very global in nature.
Ryan, founding partner at Hashed. We oriented from Korea. Now we are also like positioned as a bridge between West and Eastern.
Joey, one of the partners at Founders Fund. We invest in everything, but I spend about 90% of my time on early stage crypto.
And hey, I'm Nick. I'm a partner at Standard Crypto. We're a venture firm that combines deep crypto nativity with elite company building experience.
Yeah, okay. Yeah, the first question we like to discuss here is about the cycle. Yeah, so since last year, the market changed a lot. Yeah, like the BTC and ETF approved. Yeah, so that's good things. Yeah, and then every one of you guys successful invest in the infra tokens. Yeah, but recently most of the infra tokens underperforming compared with the last cycle. Yeah, so most of the attention shifting towards applications. Yeah, so how will this affect your investment thesis? And I'm curious, yeah, where's the cycle now? And do you guys believe the upcoming summers will bad? Yeah, so maybe Vance, you can take it.
Sure. I think it's pretty standard fare for a bull market for things to be led by Bitcoin and to gradually bleed into the rest of the market. And if you think about it, the major L1s probably have not been launched yet, and that's a kind of a cyclical indicator of where you are in the cycle. And so I think, for Haseeb, that's Monad, and for us, it's kind of Barachain. And those are the net new ecosystems that are going to have net new developers coming in. And I think you're going to see ambitious new things built outside of just infrastructure as well. And that is kind of the core question that a lot of people seem to be asking themselves is, can we build things that earn billions of dollars in fees? And I think we can. I think some of the wins are going to be in DePIN, some of the wins are going to be in infrastructure. But look, like I think in our lifetimes, Bitcoin goes to $1 million, ETH goes 50 to 100K, and you just kind of need to weather the volatility. But what is over is that a rising tide lifts all boats. The random meme coins that you bought, a year ago are probably never coming back, and that's probably for the best as well. But I think, there's reasons to be optimistic, and I think we can build ambitious new things. It's just going to take a minute. And there's 50 days till the election, so if that's what you're playing for, I really don't know what to tell you. I think 2024 to 2028 is going to be pretty lit, and I think Trump is going to be president, and that's going to help a lot.
All right, you heard it here first. I'm going to take a stand on this question, is that I think the premise of this question is kind of bullshit, because infrastructure is consumer. Like, what do people use layer ones for? The answer is everything. Like, most of what people use L1s for is just to pay each other. Payments is consumer. That is what people do with blockchains first and foremost. That's what Bitcoin was originally for, was to pay people. So the idea that, well, where are all the consumer apps, by which we mean, where are all the games, or where are all of the, rinky-dinky little things that you open in a browser, and you're doing something very, very specific, not recognizable as financial in nature, that's non-financial consumer. And non-financial consumer, you might ask the question, okay, where is non-financial consumer? I don't know. I never made the claim that non-financial consumer was going to be big in crypto. In a way, the onus is on the people who do think that there are all these non-financial consumer use cases that are going to be big in crypto. I think there will be some, but the reality is that we've always known that crypto is primarily about money. It's about finance. It's about disrupting, what is one of the biggest possible addressable markets in the world, which is how we denominate wealth and how we pay each other. So the idea that, like, well, but there's all these blockchains and there's no apps. I'm like, the blockchains are the apps, and the apps that already exist, things like Uniswap and Compound and Polymarket and whatever, they're all cross-chain. They're all deployed almost everywhere because we already know what people want to do. with blockchains, which is to pay each other and to create these financial ecosystems. So that's my pushback. I think it's a little bit of a false dichotomy to claim that there's no consumer story for crypto, it's all infrastructure. I think infrastructure is consumer.
Yeah, so I'm from Korea, so as everybody knows, Korea is like very good, famous for the contents, entertainment, IP. Actually, we are quite putting a lot of effort for the finding good deals in entertainment and gaming IP sector. We led Story Protocol 2 years ago. Also, recently we invested in many gaming projects as well. So, like Haseeb said, definitely like layer one itself is consumer, but it needs a lot of effort and capital to onboard the user actually who is not like friendly to the crypto wallet and everything. One of the example is like we made our own K-pop group named Triple S. Recently, if you go to like Token 2049 or KBW, you can see everywhere this group. And actually, like recently, we onboarded a few 100,000 users to our app, and they're using, they're like seamlessly paying NFTs. Even they don't know like wallet address or how to use how to keep the private key, but they're using it and they spend the money for the NFT. So this is our recent thesis. And cycle-wise, obviously, like election is coming, but I think rather either Trump or Harris win. I think most of the risk is productive. So I think over long term, I think bull market is coming.
Yeah, I think when it comes to like the question of where we're at in the market cycle, I do think we'll have a rotation into higher beta, higher vol assets, both as the Fed cuts rates, but then also as I do think it matters a lot whether Trump or Harris wins. And I think if you're long crypto, you basically have an extremely levered bet on Trump, and prices will go up a lot if he wins, and there kind of be this euphoria in 2025. And if he doesn't, and you think Harris will be good for crypto, you should go back and read the like 200-page reports that Biden had every federal agency create. They're not very friendly to say the least. Some of them even include requests to modify the statute of limitations retroactively. Things like increasing the prison sentences for like really tiny violations that no one ever goes to jail for in traditional finance. So yeah, I think it's very levered to Trump. And then in terms of consumer, I think there is actually some stuff that's not just like trading on Uniswap that's interesting. One obviously is I have a Polymarket hat on. I'm very bullish on Polymarket. I think I was running the numbers the other day. InTrade did about $200-something million in volume on the 2012 election, and that was sort of the heyday of prediction markets. But actually, the heyday of prediction markets is today because Polymarket did significantly more than that in just the last month. And so I do think we're starting to see consumer stuff that's kind of expanding beyond crypto, where people I know who have nothing to do with crypto regularly cite the Polymarket odds about both the presidential election, but also other things. So, and even though that's sort of financial in the sense that you're betting, it's different than just like purely trading like dog with hat or whatever. So I think there's some cool stuff finally happening.
Nice. Yeah, I agree with a lot of what everybody else said. Maybe I'll just add one point on kind of infrastructure versus consumer. I think in the bear market, there was a lot of talk about the infrastructure premium and the advantages of investing in infrastructure. I think part of the reason for that was that in the bear market, people didn't really know what the future was going to look like. And there was this indefinite optimism. And one way to play indefinite optimism is to invest in these horizontal platforms that can survive irrespective of where the future goes, whereas consumer often necessarily requires you to take a more definite view on how people are going to use these applications and what the future is going to look like. But because there was this infrastructure premium, there were a lot of investors and founders who reacted to that by building or investing in some new infrastructure project, whether that was an L1 or an L2 or some piece of middleware. And eventually there were so many new infrastructure projects that the market couldn't take all of them, and that infrastructure premium started eroding a little bit. And as that happens, it kind of shifts the incentive landscape such that now maybe investors are more incentivized to invest in new consumer projects because the infrastructure projects just aren't making that much money. And similarly, maybe founders can't raise for the 50th L2 or the 20th L1. And so because of that, maybe they're slightly more incentivized to pursue a consumer project as well. And I think on the margin, that's a really healthy trend.
Can I ask a question to the audience? How many people know what the FAT protocol thesis is? Okay, most people don't know. So the FAT protocol thesis was, I think it was 2017, that I think it was Joel Monegro who originally posted this, that basically in the internet, most of the value was captured by applications like Facebook and Google and whatever, not by the people who create TCP/IP or even ISPs. They captured almost no value. In crypto, it's the other way around, is that it seems to be that the blockchains themselves capture a shitload of value and very little value is actually captured by the applications. This is a debate that's been going on for a long time in crypto. And I think at this point, I mean, it's been like 7 years since the FAT protocol thesis was proposed. I think at this point, it's time to call it a theory, which is that, in the science sense, that it's kind of been 7 years and it's still true that Solana has captured a huge amount of value, and the protocols in Solana have captured a very tiny portion of all the value that that Solana holds. And so I think this is just a general property of crypto that we've just observed. I don't think that we created it or that we have a really good understanding of why it happens, but it's just really obvious now for 7 years in a row that yep, every year, FAT protocols, FAT protocols. Curious what you guys think about that question.
Yeah, I think that's absolutely true and very underrated. I think the market often is super critical of new L1s, but they consistently perform super well in the public markets. But I think this only applies for L1s. And I think a lot of other infrastructure projects don't really get to take
not
advantage.
L2s?
I think some L2s get really good valuations, and I think it's going to be interesting to see where they are in the next 3 to 5 years. I think a lot of L1s get priced as monies, or the probability of them becoming a successful money gets priced into their present valuation, and it's not as clear whether that's also true for L2s.
I like to say the FAT protocol and Sing application is very famous thesis. Yeah, so we also like to discuss a little bit about because FAT protocol pulls a lot good consumer apps. Yeah, so we have seen like Polymarket, Pangfang, Farcaster, some good apps. Yeah, they happen. Yeah, so my question is about what type the unique value Web3 apps can offer and Web2 apps cannot offer. And do you have some good investment case recently? Yeah, they related about the organic growth or sustainable model. Yeah, so in the consumer app side.
I would say games. I mean, Polymarket's a good example. DeFi is a good example. We're seeing things with energy now. That's pretty exciting. I mean, the framework is the same for every end industry. It's, can you lower the cost via smart contracts? Can you pay people tokens to go do things? And if you give people tokens, they will go do things. Whether that is valuable over the long term is, kind of up to you. You can have people build a mesh network. Will they actually switch their phones to that carrier? You can have people do this, that, or the other thing. But I think kind of broadly where Silicon Valley is kind of interesting to think about crypto through the lens of, and it is a shitty time to build a startup in Silicon Valley. Like all the Y Combinator startups are getting crushed. You kind of have this sense of we're at the end of technological history. You have the American dynamism bros that are literally building rockets and ships in an era where we couldn't even get enough margin on software businesses for it to work. And so I think for a lot of new businesses, crypto is going to be the answer. And being in Asia, it feels like crypto is the entire tech ecosystem. And I think where the consumer apps, why is this not a mass adoption, whatever, the first application that was usable in crypto came out about 4 years ago, and it still costs $1,000 to use. And so I think the industry basically needs to give itself a little bit more license in terms of the applications will come, but we are so early in building them that it's right to not have them this moment. But they're coming. I remain very optimistic. I would not invest in a traditional startup ever. I would only invest in token-based startups.
I think Vance said it very well. If you give people tokens, they will do things. And that, so far, is about all we know. If you give people tokens, they will do things. We don't really know how to make those things retentive. We don't really know how to make them sustainable. We don't really know how to make them sticky. There's a lot of things we don't know, but we do know if you give people tokens, they'll do things. So I think, in a sense, the other thing that we do know is that a lot of things don't work anymore when you introduce money, right? I think there's social media is a perfect example of this. So Farcaster is an interesting, we talk about it like crypto, but Farcaster itself there's no money in Farcaster, right? It doesn't have a token. You have to pay to like create an account on Farcaster, and that's it. But you don't have to pay to post. You don't have to pay to like do other stuff, or at least not at the moment you don't. And there used to be old social networks. So I don't know how many people remember Steemit. Steemit was probably the first big crypto social network. It was actually eventually taken over by our good friend Justin Sun, who just everything he touches turns to gold. And Steemit was just, it was exactly what people would imagine when they think of a cryptoified social network. And it was absolutely horrible. And it was absolutely horrible because it attracted exactly the kind of people you imagine it would attract, which is like the shittiest subreddit you could imagine. That's like the get-rich-quick subreddit, right? And like the people who were there were really there. It wasn't bots. It wasn't like fake people. They were real people who the only thing they cared about was making money. And you probably know people who all they care about is making money. It's like having a village full of car salesmen. It's just like the worst kind of people, the worst party you've ever been to. That was Steemit. And so there is something about the intersection of crypto that you have to be very, very careful in the way that you allow money and incentives to inflect an application or a community or a mission. And the honest answer is that I don't really have a good answer for, there's no playbook yet. We'd have a playbook if we had 10 examples of really great, novel, sustainable crypto applications that are not financial in nature, that you introduce money, and now it's even better. And I think that's what the journey really is for startups that are trying to figure this out, is how do you do that without losing the spark of what makes the original thing, whether it's a CDN or whether it's a social media platform or whatever, not get lost in that cloud of moneyness?
So about the FAB protocol, if FAB protocol is real, I feel very sad because then like everybody just will just invest Bitcoin, Ethereum, will not invest to a new startup. So for us, I want to bring the example again, the Moderator. We're K-pop idol, the 150K fans. They bought about 3 million NFT. One NFT is cost like $4. So far we made 12 million USD. And like now, like the NFT sales is growing every year. Now, like monthly revenue is about 1 million. They're like, even though the market is fluctuating, like the problem with the current Web3 application, let's say like an XC, once the NFT price drop, and they all like leave and they don't play the game anymore. Once the NFT or token go up or PFP, the community got very, very hot. They all depend on the price. They all want to make money. But IP, entertainment, the K-pop fans, they love the K-pop like singer and IP. They don't leave whenever, even though the market draw down. So I think eventually we have to accumulate the user who like the application itself or IP or the platform, the product behind the platform, even though they don't care about the market. And I think the true application value will be from that kind of audience.
I think maybe no one mentioned it up here because it's sort of too obvious, but I think the thing that Web3, that can actually bring to like consumer apps that I think is actually quite interesting is sort of kind of the obvious nature of it, right? So it's, the markets are 24/7. They're sort of inherently, for the most part, global. You can do payments without, chargeback risk. And, if you look at kind of a lot of the reasons why crypto financial markets actually work pretty well, it's like a combination of those things. And the chargeback risk one is actually very kind of underrated, especially if you look at like prediction markets again as an example. The average betting site spends about 30 to 40% of their revenue on payment processing fees. And the reason the fees are so high is because the chargeback rate is quite high. If you bet on the Yankees and then they lose, a lot of people just say, "Oh, actually, I never placed that bet," and they charge it back to their credit card. And so, you can eliminate problems like that with crypto. And so, I think a lot of the interesting consumer stuff tends to actually intersect with like a lot of the core value propositions of things like Ethereum and what smart contracts provide. That's certainly been the case for prediction markets and things like Polymarket.
Yeah, I don't know if I have any like strong insight into how crypto rails or sort of Web3 elements are going to be applied into traditional Web2 applications. What I can say is, like, if I think about what sort of Web3 apps or Web3 sort of consumer projects are working now or somewhat working now and are kind of net new, a lot of them are kind of like fancy new primitives or designs to create like fun ways of getting rich or making a lot of money. And I think like maybe we'll see a lot more experimentation there. I don't know if that's going to overlap with these Web2 apps or in what way, but that's sort of a lot of the sort of innovation that I'm seeing right now in Web3 consumer.
Interesting topic. How to look for the real users in Web3? Yeah, so we like to discuss the PK question. Yeah, like will you guys invest more in the Web3 native platform or like to invest in the Web2 platform? Yeah, everyone knows Tong bring most Web2 users to Web3. Yeah, and right now like Binance also listing a lot of projects in Tong. Yeah, so will you guys consider investing some deals in the Web2 platform like Tong ecosystem? Yeah, or you guys only invest in crypto native platform like Farcaster, Polymarket. Maybe this time we can start from Nick.
Yeah, sure. I mean, I think fundamentally we're just interested in partnering with exceptional entrepreneurs, building generational companies, and if they have some crypto element, I think that's kind of enough for us. And whether that's like full-on Web3 or whether that's some Web 2.5 thing is sort of less important to us. Really, we just want to be working with great people and great companies.
Yeah, on our end, we'll look at anything. I think in practice, you know, we tend to be quite bullish on crypto, and then quite bullish. You know, I actually disagree with Vance. I think you can actually make a lot of money launching rockets. But you know, I think this area we're probably not as bullish on is like traditional Web2 software. It's I agree there that it's basically become a race to the bottom, and there's not really that much juice left to squeeze, so to speak, in that area. So quite bullish on crypto and physical stuff. Less bullish on the Web2 traditional software side, I would say.
Actually, a few years ago, already KakaoTalk and Line, which is like a #1 messenger in Korea, Japan, they tried to onboard like a blockchain and seamlessly integrate the blockchain technology to their messenger, but eventually they failed. Tone obviously like a little bit different because like I think philosophy is different, but still the user characteristic are quite similar. The problem is like the stickiness is very not great. So conversion rate is always very low. Like even KakaoTalk and Line, it's like less than 10%, even though like they're quite dominant in that market. So like always like I think the new service will arise from the people who feel uncomfortable from the incumbents. But the users in Telegram, I think they don't feel that much like uncomfortable about the Telegram ecosystem yet. So I prefer to invest more like genuine native Web3 application and infrastructure.
Yeah, it's a good question why Ton has been so successful, because the lesson that as an investor that I learned from the last 7 years of seeing Web2 companies try to build in Web3 is that it just never works. Right? So we saw this with Kakao, we saw it with Line, we saw it with Signal, with MobileCoin, we saw, of course, Libra tried to be, the biggest dog in the crypto world, and of course it just kind of fell on its face. And the lesson seemed to be, wow, this just never works. And even when it does launch, nobody cares, and the energy level just doesn't get sustained. Right? Like people get really excited at first, but then the retention is bad, the applications aren't there, the ecosystem is hard to build, and they just kind of orphan it and leave it in a corner somewhere. And Telegram did not do that. And that seems to be a big part of the reason why the Ton ecosystem has been really starting to flourish. The other thing about it that's really interesting, and it's something that I reflect on a lot, we've been talking a lot about consumer, and most of the time consumer in crypto, like the really deep consumer, like you notice what we've been talking about on stage. Right? We've been talking about Farcaster, which is, or like Story Protocol, which are very highfalutin kinds of consumer, right? Real consumer is like, dog with hat. That's real consumer, right? Dogecoin is real consumer. Pump.fund is real consumer. That's what most people want to do on a blockchain. It's get-rich-quick schemes is real consumer. And in it's sort of the case that in every cycle, the real consumer stuff is pretty embarrassing, right? Like if you look on Ton, the biggest app is Hamster Combat, which is you tap a picture of a hamster over and over again, and that's it. And it's got way more users than anything else in crypto. And so I think for one thing, like VCs have a really tough time investing into embarrassing stuff. And that's just a reality, which is that the people on stage are not really going to be able to capture the true zeitgeist of what the average median person wants to do on a blockchain, because it's just kind of like, that's not going to end well. And we kind of know it, right? Like, okay, Hamster Combat is not going to be the future of gaming. And in the same way, Dogecoin is great, but it's not the future of money either. And so I think for that reason, you should be, when you're thinking about consumer, a lot of the stuff that ends up really working at big scale ends up looking really stupid. And the VCs never invest in it. But I think that's one of the reasons why Ton feels so unique, is that the team really understands that. And the team has really been willing to lean into a direction that like Libra would never want to get behind Hamster Combat if Hamster Combat arose on Facebook, right? They would be like, oh my God, shove this in a corner, let's never look at it, let's not even acknowledge that it exists. But Ton is like, Hamster Combat, amazing. Look how many users we have. Iran, the Iranian National Guard banned Telegram because of how many people were playing Hamster Combat, who are like generals in the Iranian army, right? That is crazy. And Telegram embraces it. So that feels what's really unique about Telegram that nobody else has managed to do. And that's why I think Ton feels like it has much more legs than any of the Web 2 to Web 3 transitions I've seen.
Yeah, certainly more successful than Libra. I think the long-term enduring question with Ton is like, what are these users worth? And if you take a step back and think about it, they kind of look like your average mobile free-to-play gaming users. And those are low ARPU users that don't spend a ton of money and they churn out pretty quickly. And so, the future of consumer is correlated to like what types of users are actually available within the ecosystem. I'm pretty bullish on the crypto native capital. There's so much money in crypto that you can have these massive runs in assets, and you can have people spending billions of dollars of fees on crypto native things. And the question about those fees is like, can you corral them? Can you align them? Can you get them sticky and sustainable in a way that it just doesn't disappear overnight? And not to show Barachain, but like POL is an attempt at that. And I think the blockchains that come out, in the next couple of years, what have you, if they're focused on speed and cost and all this stuff, like I do think it's interesting that Kyle from Multicoin, who I think is very smart, believes that Solana is like this technological wonder. I think it's actually this alignment thing that happened when SBF went to jail and they all locked in, and they, like, when we were looking at Sol in the bear market, one of our biggest critiques is like the developers seem to be longer on Sol than they are on their own projects, which is kind of like the fat protocol thesis in some way. So I'm bullish on the crypto native capital. If we get more users, that's amazing. We're going to have 1 billion people on chain at some point. But the whales, like, there are no customers like that anywhere in the world. Like, the closest thing to it is B2B SaaS users, and even they aren't spending millions of dollars a year. So we invest in both, but that's kind of my take.
Okay, so for audience, have you got the answer about they invest in Ton or not? Yeah, so that's pretty interesting question. Yeah, I'd like to say, we like to discuss another interesting topic about the VC tokens. Yeah. Most of people, recently they forgot the concept of the VC tokens. Yeah, because most of the VC, they go the potential upside and price discovery, in the private market, and left, a low flow and high FDV, in the market. Yeah, so most of the community they complain, we don't like to flow about the VC tokens. Yeah, but is it the truth? Yeah, to be honest, I have a friend in the traditional market side. He did a lot of pre-IPO investment, and for the lock-up term, like 6 months and 1 year. So they invest in IPO, and lock-up term only 1 year, less than 1 year. But for most of the VC firms, our lock-up term around 3 years, 4 years. So that's pretty interesting topic. Yeah, I'd like to say how to look for the better alignment with founders, and with exchange, and with community, retail community. Because I like to say the investment firm, like Binance and community and founder startups, they have some disalignments, right now, because the VC need to wait for 3 and 4 years, and the Binance or some of the exchange they like to look up for longer terms. Yeah. So how to look for the better alignment with these departments? It's the pretty interesting things. Maybe Vance.
I would say, first of all, looking at the VCs who actually fund it, I would say everyone on this panel is there's a difference between funding things that you think are going to work and will have long-term enduring value versus funding things that you think the market will like. And the cynical folks who do VC kind of invest in the latter. I think everyone on this stage is on the former. But obviously, everyone hates VCs, whatever. Solana was a VC coin. People seem pretty happy with that. Ethereum obviously didn't have VCs, but we're past that era of crypto. We're not doing proof of work fair launches anymore. So my advice is just kind of get used to it. You have to have some sort of accountability on yourself in selecting the coins that you think will do well, and you have to know why. And crypto is kind of the answer to what if the VCs also ran the stock market? And it's kind of like you're the firefighter, you're also the arsonist in some cases, and you do need to have some sort of quality filter, and the exchanges also need to play a role in saying that we're not going to, list shitty projects. And I like Binance, and I think they've been doing a good job listing a $15 million market cap coin. That's kind of a tough look. And so there needs to be some sort of industry-wide quality filter. It's not just incumbent upon one person to police the rest of the industry.
Yeah, we're running up on time, so I'll be brief, but I will say Ethereum itself, funded by Joe Lubin and Xiaofeng, they own a lot of ETH. I think Ethereum itself was also a VC coin once upon a time.
So I think it's all about just demand and supply. The reason why a VC now is investing tons of money to the project is that they raised tons of money a few years ago, but they stopped a bit. Now they're pushing the deployment for the project. When I have a conversation with Binance and though the Binance listing team and the C-level, they didn't like the VC coin, but Vin said, I think we have to be used to it. It is what it is. The market is like this.
Yeah, I think I'll comment on I agree with everything everyone said, but I'll comment on the low float, high FDV thing. I think this isn't something that was driven by the VC market. It was actually driven by the exchanges. The large exchanges sort of told projects they had to enforce these long lockups in order to get listed. I think a much better market structure would be much more how traditional capital markets work, where post-IPO, you can sell 6 months to a year after. And then what this would do is it would basically either force projects to stay private longer and actually make something useful before delivering a token, or even if they go live too early, the market would very quickly correct the price, presumably in the downward direction quite a lot, unless it's actually something useful. And that, I think, would actually solve a lot of the problems that retail participants have with the market. I even encountered this in my own personal account. It's hard to buy an asset on the public markets when it has 3 years of essentially net selling from unlocks coming. I'd much rather have the unlocks come relatively quickly, get a big washing out period, and then I'd love to be the contrarian person who buys the asset kind of near the trough. But instead you're kind of forced to either buy or not, make this buy or not buy decision while there's kind of this nebulous multi-year long vesting period, which it's just kind of a broken capital market structure, I think, is sort of my answer. But it wasn't the VCs who set it up this way. It was mostly the exchanges.
There's also this sense in which the market is self-healing, where if people in the public markets feel like they're being adversely selected against on all these VC coins, they're going to stop buying those VC coins. And if that's the case, then those VC coins will get lower valuations. And if that's the case, it means that investors in the private markets, when they're thinking about what to invest in or how to price it, will probably price it in a healthier way because they're not being treated as favorably in the publics.
So if you think about it, we're really the victims.
Sometimes.
Yeah, and the final question, most of the panel on this, come from West and East, and most of our audience, also come from, different religions. So generally speaking, I like to discuss the Asian teams, Asian founders. They have pretty strong in building application, and they have a strong execution and can deliver good user experience products. Yeah, so that's the reason why IOSG particularly bullish about Asian teams and founders. Yeah, so from the Asian founders perspective, I just asked the question from the audience. Yeah, so do you guys have some suggestion? Yeah, for Asian teams, they can build the products for global markets. Yeah, and from the evaluation investment case, how do you guys prioritize teams, directions, and products? Yeah, so maybe we can start from Nick.
I mean, I think increasingly we're seeing that a lot of projects really aren't global but start locally and really win in specific geographies. Maybe like a specific L2 or L1 is used more in the West than the East or vice versa. I suspect we're going to see more of that in the future. And so I would encourage a lot of Asian founders, just like I would for a lot of Western founders, to just like really dominate the market they feel like they really understand. And typically that's going to be a massive outcome on its own.
Yeah, we invest across geography. So, I think like best advice I'd have for, tackling kind of markets outside to Asia would just be, to like actually like either spend some time, for the founders to spend some time in the West, like and talk to people in the market they're actually trying to expand into. Not very novel advice, but it's sort of like that's like what actually works is you generally have to be on the ground in whatever market you're tackling to at least understand it enough to be able to, break into that market.
We prefer to invest like Asian founders who can target Western, Eastern both. Like that means like Western market more like capital wise. Like there's so many mega funds, though raising from the mega funds and getting a good brand. And Eastern market, I mean, of course the onboarding on like retail and like maybe listing to the exchange. I think the founder who can do both, they will maximize the profit and like effect.
We've got a big footprint in Asia, but the number one thing that is obvious when you're investing in crypto for a long time is that despite the fact there are many different language communities that take part in crypto, crypto mostly lives on Twitter, or now known as X. And regardless of where you are from, you can always participate in that global conversation. And the projects that have done the best, I mean, obviously SynFutures, which we're investors in, is a perfect example of that, an Asian team that has managed to build a really global footprint. And everybody knows of SynFutures. People might not even know that they're from Asia. It doesn't really fucking matter. What matters is that you are building a product that everybody in the world cares about and wants to use. And so as long as you can plug into that global conversation, you're welcome, and any VC is going to take notice of a product that's being used by people all over the world.
Yeah, we love Asian founders. I mean, maybe the unique take is like there's this meme of founder mode in the US right now. It's like Brian Chesky all hopped up on whatever, just like, being an absolute lunatic. We see less of that. I mean, like the kind of like prototypical white dude in the US, I say this as one, but like they're better at like bullshitting, being aggressive, aggrandizing people, whatever. And then I think of kind of like CZ back in the day, he kind of had that too. And that's a rarer trait, in Asian founders. And so I think that is kind of the thing that we notice the most is when there's a founder in Asia that like is almost so confident that they don't want our capital. That is kind of the biggest signal that this could be something big. And frankly, like coming to Asia is the home of crypto in many ways. It certainly feels more connected with the roots in some times. And I think just using that to your advantage is kind of the key.
Yeah, that's everyone's insights. Yeah, so stay optimistic and move forward positively. Thank you.
Thanks, everyone.